Hi guys, it's Becky here from Properties on Sea. I'm here with the lovely Sam from My Mortgage Angel, and we're here today to talk about and to have a conversation about all things buy-to-lets. Please make sure that you like and you subscribe to our social media content. All of the links are going to be down below, and also we're giving out a free resource. Basically, what it is this conversation on a piece of paper showing how me and Sam work together with properties and how we're giving out a free resource. And what is on the free resource is an interaction between how me and Sam work. It's a flow diagram. You just follow it along and it shows how we work together. If you wanted a buy to let and you don't know where to start with the process, it just shows the process of what you do in order to secure your idea. So let's start with our conversation. Sam, how are you doing today?
I'm okay. How are you, Becky?
Yeah, I'm good, thank you. So yeah, give us an introduction. What is a buy to let?
So, right, straight in. Okay. A buy-to-let really is a property that you rent out. It's not somewhere where you live, and it's not somewhere where you rent it out to family either. There are restrictions on if you've got a mortgage on a property, then there are restrictions about what you can do and who you can rent it to.
Brilliant, brilliant. And so what is the difference, the main differences between a buy to let and a residential mortgage?
Um, it's actually quite straightforward. If you take a residential mortgage, the mortgage lender's looking at your earned income to see that you can afford the mortgage payments. So with a residential mortgage, we're looking at how much you can borrow. It is based on how much you earn less your fixed outgoings. On a buy-to-let mortgage, most lenders actually just work from the rental income of the property. So
Right.
it's a much more straightforward calculation. Generally, the rent will need to cover the mortgage by a ratio of around about 145% or 125%, depending on the situation. But it's based on the rental income of the property. Some lenders do have minimum earned income requirements, just so that if the property is not rented out, that they know that you've got some income coming in, because you've got to still pay the mortgage whether your property is rented or not.
Mhm. So earned income is the money coming in from their rents. Is that right?
Earned income is money where you've got money coming in either from a job, self-employed or employed. Some lenders will allow you to have that income can all be rental income. So where people have large portfolios, they don't necessarily need to work. If you've got enough properties, it works for you and you don't need to have another job. Then there are quite a few lenders out there that will allow that other income to be from a portfolio of properties as well. Yeah, very good.
Perfect. And what sort of deposit would you need for a buy-to-let property?
Standard deposit starts at about 25% to get the breadth of the mortgage market. There are some lenders that will lend a little bit more, so you need a slightly smaller deposit. The amount of deposit that you have will actually determine the mortgage rate that's going to be available to you. So the amount you can borrow is based on the rental income of the property and the value, and how much it costs you is going to be based on the risk to the bank. So the bigger the deposit you've got, the lower the rate's going to be, because the lower risk there is to the bank.
Mm-hmm. And how long usually can you have those mortgages for?
Well, they used to be 25 years, but a lot of lenders have actually gone up now to a 40-year maximum term. There's actually a couple of lenders out there that have no maximum age as well. So you could take a buy-to-let mortgage at age 69 for a 40-year term. So you could be 109 when you'd have to repay that mortgage. Lenders are looking quite a lot more now at the fact that why should you have to pay off your mortgage just because you retire? They're looking at the longevity of a property passing between generations. So
Right,
that's
okay.
why some lenders are moving into that space. All buy-to-let lenders, all mortgage lenders, whether you're in the buy-to-let space or not, they've all got their own criteria of the clients that they're looking for. So when you speak to a mortgage broker, we can understand what it is you're trying to achieve for your situation, and then kind of steer you towards the right lender for you.
Brilliant. That's really useful information. And how much do these cost?
Well, how much is a bit of string? It depends on how much you borrow. It depends on interest rates at the time. But typically, the only thing I can really tell you for sure is typically most buy-to-let mortgages will be taken on an interest-only basis. So the mortgage payments are actually, they're just covering off the interest. Obviously, you need to think about how you're going to repay that interest-only mortgage at the end of it. Lots of options available there. And also mortgage lenders have typically an annual allowance where you can make a repayment. So you might have, hopefully you've got some extra money coming in from the rent of the property. You might decide you want to start paying that mortgage down. Most lenders will allow some form of overpayments. They're all very different in their approaches, but you could actually start paying that payment down while still on an interest-only mortgage.
That's really useful information. Is there anything else to consider with buy-to-let mortgages?
There's quite a lot of risk warnings that that would talk about, but that's more of an individual situation. I have got a document available for people to have a read through as well. Everything we do is regulated, so that's why I've got documents available for anybody that's interested. But you just need to be aware that buy-to-let mortgages are actually not regulated by the FCA, so you wouldn't actually get any help in the event of a complaint. You wouldn't get any help from the ombudsman. So just make sure that you understand what you're getting yourself into and what the risks are as well. So I've done the mortgages is the boring part of buy-to-let. So I think it's much more interesting talking about the property, Becky, and that's where you come into things. So tell me, why do people buy buy-to-lets to start with?
There's a couple of different reasons, and I have to agree with you. For me, the property side is the more exciting side. But buying a buy-to-let is a great investment vehicle. Not only do you get the rental income each month, but you also get the capital growth. So we all know that properties pretty much double in every 10 years. So you've got that growth going on whilst also having the income from the tenants. It's just a really good investment vehicle for people to get involved with, especially if they're looking for a more passive type of investment or passive income.
Yeah, and you can drive down the street and you can see it, and you know that it still exists. You can kind of touch it, can't you?
It's not crypto. It's not something bizarre. You can go and see it. You can go inside.
Yeah.
It's real.
Only when the tenants let you in.
Well, there's that.
So what kind of property makes a good buy-to-let?
So here in Southend, there's two things that I would say that people are really looking for at the moment within the market. So people are looking for 2-bedroom flats along the seafront, in Westcliff, all around Southend. Two-bedroom flats are really hot at the moment. But then on the other side, you've got the family home. So something with a bit more of a garden, something with a driveway, something with a bit more space for a family. Both of these are really good property types to buy with a buy-to-let in mind.
And I suppose it would be slightly different maybe on the area, because if you were in a really good school catchment area, then maybe you'd be looking more towards the family size property rather than the flat. I don't know.
Well, yeah, absolutely. It's all just a bit of common sense, but this is why it's great to reach out to agents like myself, where we know where the markets are and where the hot points are. So come and pick our brains before you go and invest, and try and get some information about what you should be looking at and where you should be purchasing.
And that's really interesting for people that maybe don't live in the Southend area right now. It's a great area to invest in, but if you don't have that local knowledge, then you could be buying something that's never going to rent in a million years. So that's why talking to someone like you really adds value to the process, doesn't it?
Absolutely. You want the right type of property in the right area. You've got to match these two up.
And then how do you find the right tenants to go in?
So you've got two options. You can find them yourself, you can manage the property yourself, or you can come to a lettings management agent. And if you do come across to a management agent, you've got the option for them just to find your tenants, just to reference your tenants, advertise and onboard them. That's just the lettings side. That's the letting only option. Or you could go for the full management package, where that plus they are looked after, they are all the maintenance for your property is included in that. It's a really hands-on service. So you've got to have a think about what it is that you want to do when you get your investment property. Do you want to be hands-on, or do you want to enjoy that passive income?
I definitely want to be a hands-off kind of person. Is there anything else I'd need to consider if I'm going to choose to self-manage?
Yeah, there's quite a lot to consider. This one's a really important one. You need to have a think about and do some self-reflection about how much time you've got and how much knowledge and contacts that you've got. So for time, have you got time to advertise? Have you got time to meet the prospective tenants, show them around the property? Have you got time to vet them? Have you got time to onboard them? Have you got time to do the inventories? Is that something that you want to do as well? Like it's quite a lot of time. It's a full-time job to do these things. Is that something that you want to be spending in your downtime? Do you have the expertise? Do you know local trades? Do you know plumbers? Do you know all of the checks that you need to be doing as well? I mean, you can learn these things, absolutely. There's lots of resources online. But let's just give an example of the new right to rent checks that everybody needs to be doing for their tenants. If you get it wrong, you've got some serious fines to be paying. It's about 3 grand at the moment for getting one of those checks wrong. So are you confident that you know what you're doing when you're onboarding a tenant? And if you are, that's great. This is a great vehicle for your investment. But if not, come and have a chat with property managers and yeah, get that reassurance that everything's going to be okay and you can enjoy that passive income.
Oh, fantastic. Well, you sold it to me, definitely, for sure. Really lovely chatting with you, Becky. Thank you so much for your time. I know how busy you are. We'll get this video out on social media, and if anybody's got any particular questions, how should they get in touch with you?
Yeah, so I'm going to have all my contact details below. If you want to have a chat with me, I'm a person that loves a chat. So just give me a call. You'll speak to me. And yeah, I can see how I can help you.
Okay, excellent. Okay, and my details are going to be somewhere around here as well when my VA deals with it. I'm not really that good with tech. I'm an expert on mortgages, but tech not so much.
Well, it's been lovely speaking to you, Sam. So thank you so much for inviting me onto this platform.
Oh, it's lovely to see you. And thank you everybody for watching. So yeah, please like, subscribe, share, and make our dreams come true. Thank you.
Cheers. Bye bye.
Bye.